Welcome to this edition of the TMG Expert Podcast Series. I'm Matt McKelvey, the president of the McKelvey Group. With us today is Matt Stavish, vice president of Republic Capital Access. Welcome, Matt. Thanks for coming in. Today we're going to talk about financing options for government contractors. One of the greatest challenges that I see my clients face on a regular basis, especially growing federal contractors, is ensuring there's sufficient working capital to cover payroll, at the least, on a new program, and generally trying to cover it for 45 to 60 days. This is especially difficult for contractors because of the very tight profit margins in the market today, which we generally see running in an average between 4 and 8%. Some contractors make more, some make less, but generally that's the range we see. And the fact that payroll and benefits often reach 20% of total company costs, that can create a real financial pressure and a squeeze for fast-growing companies. Now, most of the clients we talk to don't have internal financing, or it's not available to them, profits. They will look externally and generally look at three types of funding sources. One would be bank loans, which usually have the lowest interest rates, but they're generally the hardest to qualify for. And a lot of times there's strict loan covenants, there's potential personal guarantees and other factors to consider, which leads us to the second option, which are factoring companies, which is easier to secure, but generally it's more expensive, and there are restrictions that can be in the short term pretty tough for a contractor to maintain. And then finally, in a pinch, companies will try and look for equity investors, someone that would actually put money in to pay for a portion of the capital of the business. But unfortunately, that is one of the most expensive things you can ever do with your business is sell equity. This is the kind of thing that keeps small business owners, especially government contractors, awake at night. In my years of working with clients, I've always looked for new options, and 2 years ago I met Matt from Republic Capital Access and started learning about an option that was somewhere in between the bank loans and factoring companies, and I'd like to have him talk about that a little bit. Matt, since I've done all the talking so far, maybe you could briefly tell the listeners a little bit about what RCA does and what makes it different.
Oh, thanks for having me, Matt. Republic Capital Access, we're a specialty finance company for only government contractors. All of our customers exist in the federal space. We've been around since 2009. Our big distinguishing feature, and it's really a definition issue, is that we're a true factoring company. Other companies that call themselves a factoring company, they're really an asset-based lender. And so what is the distinctions? Well, if you look at factoring companies or companies that factor also in the government contracting space, SRA was a customer of ours and they factored. CSRA factors, other large companies factors. What does factoring do? Factoring is truly selling your invoices in a true sale fashion. So there's no personal guarantee. There's no liens on the company assets. It's non-recourse and there are no covenants. That provides a lot of advantages to the business owner. The first advantage of it is that all of our underwriting is based on the credit quality of the obligor of their invoice. So you don't have to have past experience. If you have an invoice to the Army or to Raytheon, we can securitize that invoice and advance cash for working capital and payroll. What's happened in our market is that asset-based lenders, which are providing a short-term high interest rate loan against the receivables, that's more expensive. Factoring and asset-based lending have become mixed as the same definition when they're decidedly different.
And I'll pause you there for a second because that's actually very important. The definitions we get into, and especially in the government contracting world, a lot of us assume what we are saying has the same meaning to other people, not often. So that's a great clarification. Do you find that your clients or potential clients tend to understand that pretty quickly once it's explained to them, or does it take a little more education as to the asset-based lending as opposed to true factoring?
Once they understand the difference and the benefits that they can gain from truly selling their receivable as opposed to lending against it, because the benefits are several to the business owner. You don't have to personally guarantee your financing, which is a tremendous benefit. And most of these owners who can't access capital, sometimes the limitation is personal credit. So if you can eliminate that hurdle, that's fantastic. If I'm lending a company money, there may be a limit to how much I'm willing to lend them. Or if I'm buying an asset to the Army, it can be any dollar amount because all of our underwriting is at the Army level. So you now have unlimited access to financing on government contracts if you have the corresponding receivables to back it up. And then the cost is lower because if you think about it just from a simple perspective, buying an asset from the government, that allows us to be more competitive or closer to what a bank would be. Not what a bank would be, but closer, as opposed to lending money to a company that can't obtain a bank loan. So those criteria allow us to have a very unique offering in the space.
That's really interesting. It helps a lot. Thank you very much. Maybe I ask a few follow-up questions to that. You mentioned that you've been doing this. RCA has been around since 2009.
Mm-hmm.
Was this the primary starting point for the company, the asset-based, not the asset, the factoring?
Yep.
Against receivables?
The company was started by our CEO, Ed Stuckey, and our CFO, Tim Gilmore. Both are still with the company. Right. And the whole premise of RCA was that you could securitize a government receivable, and you could offer a product with no recourse and no covenants and no liens and no personal guarantees. There's no product out there like that.
Why do you think that is? Why do you think there are other products like that?
Because it's really hard.
Okay. What makes it hard?
What makes it hard is you have to, and this really gets into distinction if an owner is evaluating financing options, one of the criteria is if you're a government contractor, just like you want a CPA firm that minors and majors in GovCon, you want a financing company that minors and majors in GovCon. We have to have the flow of funds directed to us through the assignment of claims, which is outlined in the FAR, which you and I both know is the instructional law book for how you should procure in the government space.
And so easy to read and understand.
It's very clear. It's great bedtime material. So we process the assignments on all of the contracts that we would finance, and our staff is excellent at executing on that. What we always tell firms in this space is, regardless of who you're evaluating, a bank or a law firm or a finance company like ours or a CPA firm, is it for government contractors, you want someone that majors in this space because it is so specialized and the rules are different. And, commercial finance companies that finance a lot of construction, they're not going to be great at executing in this space. And it's arduous, and there's a lot of people that are afraid with dealing with the government. And so it kind of creates why there aren't others. That's typically why.
I understand that. I think that in our business, the TMG, it's a similar thing with accounting. As you mentioned, CPA Firms Accounting in general, the client shouldn't pay for someone to learn it on their dime, and they shouldn't pay for it in a chance that not being able to secure what they want to secure out of it. So someone that understands the FAR, understands the regulations, the requirements, can navigate those things quickly. Also helps when you talk about contract awards and timeframes that are 30 days or less, oftentimes to get up and going and make things happen. So that's actually a really good point as well. Actually, if I remember right, you were even registered on SAM.
Yep, we're correct? A SAM registered finance company with a CAGE code.
That's fantastic.
Which you have to have if you're going to be financing in the government space.
Which very few folks realize.
They don't realize it. And when finance companies start thinking about, how should I do it? It's a red flag to folks. And the other there's a lot of red flags, but you want to have a finance company that at least understands the space to a high level.
I think that makes perfect sense. So you answered my other question, which was kind of a softball, but I wasn't 100% sure. Purely federal contracting, do you do any work with state and local contracting
Good
companies?
Question. It depends.
Okay, I like that answer. Why?
So
on what?
All of our financing is based upon the credit quality of the obligor. So obviously federal government, hopefully that's the best credit quality out there. Then you think about large primes will do those. So Lockheed, Northrop, Raytheon, CSRAs, there's a litany of those. Okay. Those would fit the criteria. And then if you're looking at state level, yes, we can do states, depending on the bond rating of said state.
Got it.
So, for example, Maryland has a very good bond rating. It's investment grade. Texas has a very good bond rating. That's investment grade. The state of Illinois does not. So we will not be financing any Illinois receivables.
So that's interesting because it does turn things around. When most companies think about their creditworthiness, they're thinking about their own. As you've said this earlier, but just to reiterate, in this case, it's the creditworthiness of who's paying, not the company that's actually requesting this opportunity because you are buying that receivable.
You are. And small business owners, when they think about how their AR looks, if they start thinking about, all right, well, let's look at your receivables, and you're billing another small business. And all small businesses have two creditors that they don't have to get permission from. They're subcontractors and Uncle Sam through payroll taxes. Well, not paying one can send you to jail.
Correct.
And is very bad. And the other one, it becomes uncomfortable, but it's there. And so any small business that's been hung out for payments from one of their contractors, and you just kind of turn the tables, well, then why would I want to be hung out for them too? Okay. And that's something we tell all small businesses. And once you get into a relationship, especially with another small, sign NDAs. Make sure you know who you're doing business with because you're now an unsecured creditor to that company.
It's a great point, and I think it's often overlooked because people think, well, the federal government's going to pay, but there's no direction of that payment from the federal government to go necessarily directly to that subcontractor. So you're going to always have the opportunity for someone between saying, well, this other bill is more important for me to pay, or this other invoice is more important to pay. So that is very interesting. Makes a lot of sense. That helps. Let me ask you this. How Actually, let me step back because you answered a couple of questions, which is great. What do you think contractors should think about when they're evaluating their different financing options? Because we have talked about there's bank lending, there's also asset-based, there's other options. Most people tend to think, what's the interest rate going to be as their primary driver? And you've mentioned a couple of very important considerations: personal guarantees, loan covenants, which, again, are more along the lines of you have to make certain financial ratios or certain financial measurements in order to maintain that loan out there. What other things should they consider?
The considerations, a lot of times when someone wins a government contract, their first thought is, I should have a bank line of credit now. And they don't know why, but they think that they should. The profit margin is something to keep in mind, but it's not as big of a consideration as you might think. So, for example, say you have two financing sources. One is 6% APR, one is 12% APR, and you bill $100 a month. So for one, you'll pay $6 a year in financing, right? 6% APR. And the other one, you pay $12 a month in financing, or 50 cents more a month. It's really not cutting into your profit margins because you made $1,200 in the year. You billed $100 a month, and you paid $6 more for one source over another. So when you really get into the nitty-gritty of it, interest rate is not a huge – it's important, but if we're talking low teens, we're not talking about a game changer here for the company. But really, I think one of the considerations that often get overlooked is to get a bank loan, you need two things at the same time. You need a bankable business, operating history, profitability, consecutive quarters, and then you need bankable behaviors. You need to be able to get financial statements out in a timely fashion. And those bankable behaviors could either be through internal CFO and controller or maybe through an outsourced CFO controller. But to be a good customer for a bank, which has the lowest cost of money, but the exchange is the highest effort, you need to have both of those qualities at the same time. And so tell a business owner, because a small company, the primary driver of business development is usually the business owner. So it's like you could spend a lot of time managing your bank relationship or paying someone to do it, which is great. And there's a lot to be said for that. But if you're a rapidly growing company, you got to think about how that's going to fit in your long-term plan. So there's other considerations besides just interest rate, as you brought up, and also outsized contracts. If you read the DoD awards and you look at small businesses winning work, there are small businesses that win outsized awards all the time. Banks have a lot of regulations, and sometimes to get that outsized contract going, you need an alternative source for at least a period of 3 to 6 months. And then you have the past performance you can kind of then graduate onto a bank.
And when you say outsized, you're talking about the fact that a small business might be winning a contract that's many times the size of their entire company. They've grown dramatically because it's a small business set aside, but it's much larger than a small business standard.
Exactly. Government contracting is the only business where 1,000% growth is totally reasonable. Think about that. Yeah. It's the only business where it's legitimately reasonable to grow 1,000%. If you look at most businesses, restaurants, dry cleaners, Subway franchisee, a Chick-fil-A, a gym owner, who has 1,000% growth in a services industry? No one. But in GovCon, that's totally reasonable. So that kind of breaks the traditional metrics for lending. I
got to tell you, I've never heard that phrased that way. I'm totally stealing that from you, Matt. So thank you very much for it, because I think that is a great way to describe just at its core the difference between federal contracting and the rest of the business world. Mm-hmm. It is a very different thing, and until you know it, you don't know it. That's great. I like the way you put that. That really does summarize it. Let's talk a little bit about when companies should be thinking about securing potentially this line. When do they start talking to you? Do they talk after the contract's awarded? Do they talk right when the phase-in starts? Do they talk at the proposal stage? What do you think's best? If they don't already have an existing relationship.
Yeah, if you don't have an existing relationship, the very well-organized business is doing it somewhere around when the RFP is about to be submitted. For one particular reason, we do a lot of letters of financial capability. So sometimes in the FAR, you need to show financial capability to prove that you can perform. We can provide those at no cost or obligation for $5 million, whatever would need to suffice the requirement. So that's a simple reason. But just to get your ducks in a row. Like construction, fast, cheap, and good. If you build a house that's fast and good, it's not cheap. If you need money really fast, it's not going to be cheap. Right. And then you're into the internet world of financing. Getting a bank loan takes time. Getting a financing facility set up with us, while it's going to happen, it does take time. And we always tell people, and remember, you're busy running your company too. So we tell people, if you're going to use us and you're not using us now, or your financing source, allow a month minimum to get your financing source lined up.
And that's the recommendation I give my clients from a financial perspective, regardless of the source of their financing, is to get ahead. And one thing I want to follow up on, you're right, a lot of RFPs, or a number of RFPs, I'm not sure what the percentage would be these days, do ask for, especially for small businesses, some kind of statement of financial credibility and responsibility. Basically, how are you going to ensure that you can support this contract and performance? I actually take that a step further. With every proposal we submit for clients, we recommend establishing that. Even if it's not required by the RFP, add that credibility. Show that you've done your homework, so that you've done your due diligence, so that you've actually established a process to ensure that the financing and the operational side is easy. It's about actually performance. And then all you're focused on is performance. And the fact that they can get a letter is important too, because you mentioned we have clients that have banking relationships, long-term banking relationships, and can't secure a letter of commitment because there's so much that has to go into the actual contract award. They have to know what the numbers are going to be. And I don't blame the banks. This is regulations. They have to do certain things. They have to justify how much they've offered out and support it as far as, here's our book of business that's out there. We have to be able to support how much we have in reserve to support that. So I think that's actually an important thing for contractors to realize, is that letter isn't easy to get even from an existing banking relationship.
Yeah, we tell folks we'll give a letter to anyone. You can have a bank loan in place. Just give us one business day so that we can make sure we can sit down and create the letter for you.
A whole business day.
Yeah.
Wow, that's crazy. No, that's great.
And it goes back to our model. We're not underwriting the company.
Right.
So if you need a letter for the government, yeah, I can give you the letter. I'll put the solicitation number in. I just need to be able to sit down and do it. Where a bank is a lender and they're regulated, so they can't, especially if you have a line of credit of $1 million, you need to show $2 million. For a bank, it's like, well, we need to underwrite that. That's because of the regulations, which is fine. Right. We can give that letter today and stand behind it fully.
That's great, and it's an option I don't think that a lot of contractors know is out there. It's one of the reasons we want to have you on the podcast today. I've had the luxury and the opportunity to work with you now on several clients who have gone this route, and I can confirm that that's been the case. It takes a day. It is fully sufficient for supporting the proposed amount. There's no caveats in there outside of, hey, just based upon the receivables that actually occur, and it's good. And I also love that those letters state SAM, registered, federal contractor, cage code, all those little things, they matter.
And we even cite the FAR in our letter.
You do. Actually, it's true. You do. All right. I guess the other question I have is I know you have other products besides this. I've been focused today talking about the working capital needs of a client, but those things can go beyond just a contract. What other services or products, I don't know how you define it, that you offer to clients that might need financing?
In the government contracting space in D.C., primarily most people are services companies. So you can solve the unbilled, billed services, receivable, cash flow, payroll conundrum, which we do all the time. It's pretty sufficient. Government buys everything. There's a lot of interesting contractors out there. So purchase order financing, we know how to get that done. Equipment lease financing, lease back sales, those sort of things, which is like if you think about like if you have to buy buses to do something with the government or whatever, that may be small denomination term loans, especially for the smaller contractors. I call it, walking around money. You have your receivables finance, you have payroll, but I just need some walking around money so I can not sweat every month for my rent or whatever it is. So we have a pretty good bench of products that we can offer to folks that's just outside of the typical payroll cash flow card cycle.
Understood. And I think one thing you mentioned earlier, I want to just make sure that the listeners understand too, is that there's no exclusivity, I don't believe, with how you operate, meaning there's no deposit required in the bank. There's no long-term, you have to do this work with us for 20 years in order for us to justify.
You're correct. Yeah, we don't have minimum terms or termination fees. Don't lock anyone into a long-term deal by any stretch of the imagination. And we don't take treasury deposits. We would have no idea what to do with that. So,
fair enough. And I think what the listeners should understand is that, and I'll summarize with this here at the end and let Matt give some closing remarks. I think that when it comes to financing options, the most important thing is to know what your options are and not just rely on the one you may know or the one that you may think is the right one. Even though I'm very strong and I've been very strong in finance my entire career, I still constantly am outside looking to see what options are out there. If I hadn't been looking, I would never have found what you all do, Matt. And I think that this is just another option for contractors out there to say, hey, how do I finance and fund my company? And it's the kind of thing that should be in their quiver, basically as options to go. I guess having said that, Matt, if someone wants to reach out to talk to you about what services and products you provide, how's it best to reach you?
Yep. So you can go to our website, republiccapitalaccess.com, all spelled out, or just reach us. My email is mstavish@republiccapitalaccess.com. Okay. The one thing that I would tell folks in general is it's very predatory these days are these online MCA lenders.
Okay.
and they can make a capital structure unbelievably burdensome to a contractor and very hard to clean up and get into a cohesive capital structure, is if someone's willing to give you money in 2 to 3 days, you really need to think about that. And if you're getting money online or over the internet and you're not meeting with someone face-to-face, unless like you had a very trusted source introduce you, you need to be very cautious because it is an area that is not regulated. It's full of opaque term sheets. It's full of, prepaid interest and all sorts of nasty stuff. So people need to be very judicious before they sign up for something that they can't get out of. And we run into these items, and we have to unwind and undo them, and it causes a lot of damage.
That's great advice. It's the story of life, right? Something that seems to be true usually is. I do like that. So that's great, Matt. I want to thank you very much for coming in today. When we talk regularly about HR, fringe benefits issues, pricing issues, accounting issues, this is cash. And this really does pertain to owners and to CFOs and financial leaders of companies. So I'm happy to have had you. I really appreciate your time. And you know what? Good luck and keep in touch.
Thank you.
Thanks again.